Where can bonds go from here? Are we just forever stuck in this range if the Fed is on track to do that tweak instead of an actual large cutting cycle?
So, I mean, I've been doing fixed income for a really long time. I mean, one of the beauties of fixed income today is we're going to be in a higher rate environment for a period of time. Your ability to clip coupon and income, and we run a bunch of funds here clipping 6.5 to 7 real income and real yield. And that, that quite frankly, I'd love that to stay there for a while. My guess is you're probably going to take 50 to 100 basis points off that over the next 6 months to a year. And anyway, but that's the environment we're in, and which is pretty good. I mean, if you're, in a world where you'd like to get some income, equities have had quite a good run. I mean, that's a pretty good place. Man, I've called it the golden era of fixed income. I mean, not because rates are going to drop and we're going to be a significant bull market rally, but gosh, to create this sort of yield and have a sense that the central bank's not going to be raising rates anymore. By the way, not just the Fed, the ECB, the Bank of England, other than the Bank of Japan, we're in a global easing cycle. It's just a gradual one. Not bad if you want to create some income.
And it is that Goldilocks that's playing through markets. The tension, Rick, has been from politics. It's going to be a heavy weekend of seeing how Biden performs in an ABC interview with George Stephanopoulos, but it's allowed traders to start to look for Trump, to start to look for a curve steepening that was interrupted by the economic data. So how do you look at these two? Is it too early to start trading in some of the political ramifications for 2025, or will that continue to pressure some of the starting of slowing that is currently rippling through bond markets?
So this is a year that is, I saw a stat the other day that was pretty extraordinary. 80% of the market cap in the world is going to have an election in 2024. 60% of GDP is going to have an election in 2024. So elections are going to drive bond market, equity market. And you think about particularly U.S., you have a dynamic where you're talking about very different tax policy, very different fiscal policy potentially. By the way, you don't know what Congress is going to be. One man's opinion, it's a pretty good opportunity. You get extreme moves on one side when one party takes the lead or performs well or doesn't. And it's been a pretty good environment to take advantage of going the other way because we're still not in October yet, and we're on the doorstep of the election. And by the way, we've had a French election. We just had a UK election. We're going to have there's emerging market election. I mean, there's a lot going on. I think it's an opportunity to take advantage of it. I don't think rates are going very far. I think equities will continue to grind higher. I think the dynamic around the technicals and fundamentals of equities are pretty darn good. But it's an environment where you get extreme moves on some of these election news, not just U.S., that it's a pretty good opportunity to take advantage and maybe go on the way because markets tend to overreact, particularly in quiet periods. They tend to overreact. And, to tactically fade some of that, particularly when you're in front of the election news, I think is a pretty good opportunity.